What about Telstra to that point, Adam? Can you, with conviction,
Not yet.
Say
not yet.
It's time or not?
No,
and will limits
For long-suffering shareholders, they have to hope that at some point the market has bought everything else, and then they will look at Telstra.
Yeah, look, you know,
it's as bad as that now.
We've seen other telcos running Vocus, TPG, you know, starting to get a little bit of love there.
With growth options, for good reason.
Growth options.
Yep.
But certainly no, Telstra, it's going to take some more time, and yeah, I wouldn't be going anywhere near it just yet.
I suspect, and this is a theme I've talked about, and I'm still picking it up, a lot of retail investors at the very least have still Telstra in their portfolio,
of course,
and they're now looking at finally getting rid of it, and I think that is holding back the share price. People have, after all that suffering, and it's more than 40% over the past 18 months or so, they're finally coming to the conclusion that they should have sold earlier, because you better sell 40% ago than now. But many of them are now questioning their Telstra, and I can only assume, because I'm not one of them, but I can only assume they are now selling, and that is holding back this. Because what they do is they look at the market, they go, listen, all the other ones are moving, and my Telstras, I mean, I'm a long-time sufferer, and they're still not moving, and they're finally getting rid of it.
I'll go the other side of that. I'd say that they're holding on.
You think so?
They're simply there for income.
I actually think that many of them are selling.
Yeah, well, we haven't seen capitulation, so we're not, you know, until we see that capitulation, then there's the time to buy. And if we get enough retail swarm moving through, we can see that. We can see that share price move like that.
Okay.
I'm not sure. How do you define capitulation with a stock that by nature has dividend support?
Yeah, well, you know what capitulation means on the chart, yeah?
Yeah, but dividend stocks don't do that.
Oh, well, you wouldn't have thought Telstra wouldn't have done a lot of things. I mean, we pull up a chart.
That's true. It's
fairly aggressive.
It's already lower than I thought it would be.
Yeah.
Hence, that's basically the point I'm trying to make. Is it's already lower than I think it should be.
Right. Let's get the casting vote from another guest, Chris Conway. Australian Stock
Is he
Report
joining too?
coming live to the show. He's in the wall for us. Chris, welcome. Having heard that, which side are you coming down on?
Good afternoon, gents.
Yeah.
I am in the side of the bear camp, and that's because last time out we spoke about the potential $600 million hole in the mobile division at Telstra, with you know, their take-up rates or their market share reverting back to a position from some years ago before the competing networks existed, and when competing networks at the time had some problems with delivery, i.e. Vodafone and the like. So. Yeah, that's going to be a big hole, not to mention the problems with the NBN. You know, what have they done recently? Settled a case where they couldn't deliver the speeds they promised. There's a whole host of problems there. Look, there will be some dividend support, but no, I would think it goes lower from here.
Right, okay. Well, from lower from here to a snap back from weakness yesterday, BT Investment. Are we out of the woods on this one? Because, again, the Hambro franchise, if you want to style it as such, out of the UK, said to be under now a thicket of fresh regulation, you know, encumbering UK fundies.
Yeah.
So performance fees in that sort of environment are going to underperform, not shine. Yes or no?
Well, it was looking a lot better on the open.
Oh, it is. It's doing nicely today. That's
well,
I'm
yeah,
surprised
it's now even. I guess open 10.52, currently 10.51.
Yep.
So
rally on 2%.
Yeah, so not too bad.
Yeah.
Just paint that picture then, Rudy. On
well, I think, and this will characterize this market as well. Since valuations are quite, pushing it, and money is, you can't come out with bad news now, yeah, because people will get now really jittery because they think valuations not cheap, yeah, and an announcement as BT had to make yesterday everyone was completely unaware of it. So that's quite a shock if you get that cold on your plate. Right. For a stock that is not cheap. Huh? It's almost like a CBA experience from that perspective. But my understanding is that most analysts covering the stock are operationally not that worried about the outlook.
Chris, have you got a view?
No, not a strong one. I did think the reaction yesterday was a little bit overdone, but no, not a strong buy, hold or sell either way.
Most brokers have cut their price targets to sort of the lows of $11 or the highs of $12.20. So there's a little bit of sort of price targets being cut throughout the market today following that announcement.
Has it got any kind of similarity with the aged care kind of upheaval that this market was subject to, with the government sort of arbitrarily deciding to come in, no real warning comparatively? Do you see some parallels?
No, there's probably a parallel to make with other sectors in that if you are a fund manager right now, or a wealth manager, whatever you want to call it, at least half of this market is quite bullish at the moment, and in particular, not just for between now and the year end, but the expectations for 2018 are probably on the rise as well. That's probably going to put an automatic level of support on the stocks that are leveraged to asset prices. BT would be a logical one.
Yep.
And you've seen in recent days that sector basically moving to the upside as well. I mean, Platinum was 2 months ago in the doghouse,
Magellan
and exactly Magellan has been appreciating as well.
Incidentally, the other one's Janus Henderson.
Yes. JSG, yeah.
If you want the bond connection too.
Yeah.
Chris, Santos, an unwind today, but had been on a tear to a measure, right? Just a day or so ago now. So we're building out this investor day, trying to get to grips with the sort of the Gallagher mood music. What are you taking from it?
There's a lot to unpack on this one. Look, I think they did a good job today of reiterating the transformation process, or the simplification process, of focusing on their 5 key natural gas assets. They're paying down debt a further $350 million. I think the goal is $2 billion by the end of this financial year. So they were all positives. I think what the market doesn't like is the fact that they have forecast lower their sales guidance. So this financial year to be 79 to 80 million barrels of oil equivalent. Next year it's 72 to 78. So at the wrong end of that range, you're looking at a 10% decline in sales. So I think that's particularly on the nose. The next element of it, as you say, Carsten, is the stock has had a very charmed run recently, up sort of 60 to 70% in 3 months, on the back of an oil price that to me now looks toppy. Rudy and I have had some great discussions in the past about where we think oil is headed. I might claim this one, Rudy. I think your cap was around 50. I was in the 50 to 55 range. It's even gone beyond that. It's 1 point for me by the million points for you, Rudy, so let me have this one. But I think we would both agree now that it's very much at the top of the range and probably doesn't have too much more in it. And everyone would know just how tied Santos is to the oil price.
As we sit here, and viewers are seeing this on screen, coming out of that investor day via the CEO, the Narrabri gas project, the environmental approval required to proceed, not seen as coming through until late 2018 at the earliest. So again, locate that project in the priority system for the company. Narrabri. It's pretty
according to market rumour, Santos bought this company, and I think the company's name was Arrow Energy, I think at the time. A management team with an incredibly shaky reputation, and they were basically destroying the case. Were basically destroying the case for the whole sector. So according to market speculation at the time, the sector got together and said, like, we have to take these guys out because there's so much bad publicity coming from these guys. So Santos decided it's going to be us.
Right.
So they bought the assets. At the very least, they stopped the bad news coming through the ASX and through the general media.
Except this is not good news, clearly.
But yes, and I think that in recent times, I think most analysts have removed this project from their forecasts under the principle it's not going to be developed anytime soon. So I don't think this should have too many triggers for change in most forecasts. I think the most of them have removed or put it on hold at the very least. Yeah. It's not incorporated in valuations.
Chris, Conway has kind of got strains of Fortescue in the pain years, where it was all down to sort of the debt pile at all costs, right?
Yeah, absolutely. Cost out. Yeah, absolutely. Cost out. Just refocusing the business on its core assets. But again, I think they've done a pretty good job at that. But yeah, look, I mean, you took the sort of idea right out of my head, Carsten, that yeah, it does remind you of Fortescue when everything seemed to be going wrong, costs were through the roof, and the iron ore price wasn't doing what you wanted it to do, and slowly it's turning around.
Yeah. And they got rid of the cutlery from the kitchen. Never forgot that one, because others have taken their cue from that.
They're looking for gold and lithium now.
Yeah, well, that's a whole other kind of blue sky thinking. Let's talk Domino's. Speaking of looking for growth, and Chris, again, here's a stock that isn't way down today. It's not had a relatively good month. It was kind of a reluctant buyer of a JV stake out of Japan, and the growth there is not really where the main news is to be found, is it? They're relying on Europe into H2 to really ratchet up.
Yeah, they really are putting a lot of emphasis on the second half, hoping that the story can come good. This is a real interesting one for me. I mean, obviously they promote technology, and we heard Dom May earlier in the interview talking about the technology that Domino's is going to implement. I mean, it's ordering a pizza. How technologically advanced do you need it to be? And it's interesting that in a country like Japan, which is the technological centre of the universe, they're not interested in it. Of course, there's different lifestyle habits and eating habits as well, but they're not interested in it. So yeah, they're relying on Europe. I think they're putting a little too many eggs in one basket, relying on that second half performance, and they didn't move the needle today on their growth expectations. So this was sort of a non-event for me. I think the space is becoming increasingly competitive because Pizza Hut is relaunching. There's the wage pressures that we know about because of the new awards. So this is a hold at best for me. And
this is the issue as well. Into Europe, you've got Collins that's blazing a trail, Collins Foods with KFC franchises. The talk, as you had it before, on that kind of alliance mentality for the greater good, is there any way that they all recognise that they're stronger together? Why don't they all just basically amalgamate? Because that's then a fresh growth driver. You're not just a one menu item pony.
Yeah, I'm not too sure. I mean, to put them all together, too much ego, I think.
All right, too many Chiefs. There's only one Dong.
That's exactly right. But the interesting thing is, we did talk about this yesterday. This announcement came out at 3:50.
Odd timing for them.
Odd timing.
Yeah.
The day had already passed, and now we're seeing the washout now down to 3.5%.
And the market earlier this week, as you were pointing out, too, getting to grips with the Fair Work, as Chris was just flagging.
That's my problem still a little bit with Domino. I mean, it's the change, and I don't think a lot of people correctly anticipated this, but the change in the Domino's fortunes is because previously it had top line growth and margin expansion. That is a very powerful combination if you're listed. Look at A2 Milk, for example. It's the same dynamic. Now there's pressure on the margin, so they're still growing the top line, but no longer on the margin. So it's no longer a double whammy. Right. And that's an indication that yes, times have become a little bit tougher for them. And what they do in Germany, for example, if you take a positive view, it's probably going to pay off, but it probably requires 2 or 3 years. 2 or 3 years is like a lifetime in the share market. Sure. In the meantime, the shares are not cheap, and that's because they're still growing at, let's face it, double digits, and they're still expected to grow there for a while. But it will from here onwards increasingly be volatile, because everyone will according to the market mood, focus on the negatives one day and on the positives the next day.
Not only that, 2 to 3 years' time, what bets on Don having gone. Chris, you get the last word on that one, because it's key man risk in this company, flashing amber, right? Who comes after the Don?
Who knows?
Yeah, exactly.
Papa Giuseppe, perhaps.
Exactly.
Should be Corleone.
Caveat
They do pizza.
Don't say you weren't warned. All right, thanking you, Chris Conway, for the Australian Stock Report.